I'm not so bothered by the situation we're in right now. I mean, other people have a lot of anxiety, and I suppose I'm empathetic to anybody that does have anxiety. So I think this crypto, what do they call it? Crypto crash or crypto something. This mini meltdown is going to give a lot of energy, a lot of momentum. I'm not so bothered by the situation we're in right now. I mean, other people have a lot of anxiety, and I suppose I'm empathetic to anybody that does have anxiety. But, what I said this morning on Twitter, I still believe, which is, in the near term, the market price is set by people with large amounts of money, a very short attention span that don't really understand Bitcoin as well as you do, right? So in the near term, people with more money and less knowledge set the price. Over the long term, they get the knowledge, you get the money. You just have to wait. At some point, people will understand the difference between Bitcoin and another crypto token. They will understand the difference between Bitcoin and gold, or the difference between Bitcoin and property, right? And until they do, there's a market of buyers and sellers. Some people want to go short, some want to go long. Let's go back to October of 2020. In October of 2020, Bitcoin was like 12,000. NASDAQ was 11. I think Bitcoin is 12,800 or something, or maybe 11,800. And NASDAQ was like 11,000 and change. And gold was higher than it is now. Mm-hmm. And if you roll the clock forward 24 months, Bitcoin is up by not quite a factor of 3, but a factor of 2.75. Gold is down. NASDAQ is sideways. And the rest is sound and fury. If you look back 4 years, you see the same pattern. You look back 8 years, you see the same pattern. Argentina is staring at a currency crisis, right? So the Argentine currency collapses. What's the solution? Get a $40 billion loan in US dollars. Okay. Where'd that money come from? Okay, we printed $40 billion. We sent it to Argentina. Okay, that's just created out of nothing, right? So I think that the currencies are going to continue to expand. The currencies are going to continue to weaken against the dollar. The dollar is going to continue to weaken against scarce, desirable assets. In the near term, there are going to be lots of gyrations. And the other elephant in the room here, the big point is, and this is something that I think most economists don't understand, even most conventional financial thinkers, even a lot of people in the crypto community don't understand. The inflation is not only a monetary phenomena. The inflation is not being driven only because of currency collapse. Inflation is a policy phenomena. So the Federal Reserve, in addition to not being able to stop the policies of other central banks, they also can't stop the war. And what is the war? They can't stop the war in the Ukraine. They can't stop the trade wars. We have trade wars right now. We have massive tariffs. They can't unsnarl the supply chain. They can't stop the war on COVID, and they can't stop the war on carbon. Okay, so there are massive inflationary things. And then if I tell you that the way I'm going to solve the problem is giving away free money or give away money, I'm going to subsidize fuel, I'm going to subsidize food, right. I'm going to give tax subsidies. I mean, the sound and the fury causes people to miss these things that really matter. Yesterday, when the Secretary of the Treasury said we need to get this done this year and said it in the Senate, that was a big deal. Mm-hmm. And this morning, FASB met and voted 7-0 in their meeting to create a formal project to review accounting for digital assets, which means Bitcoin. And right now the accounting is toxic and prejudicial. Mm-hmm. So there's pretty much no outcome that I could imagine that wouldn't be beneficial or better than the current status quo from a GAAP accounting point of view. So FASB, FDIC, Treasury, White House, SEC, all of these things they're all gating items for institutional adoption of an asset class. And all of them are in motion right now. And even the negative things, like you can look at the market and all the trading down. I don't think it's necessarily negative. I think you have a lot of liquidity or a lot of leverage shaken out of the system. Everyone that doesn't know the difference between Bitcoin and every other altcoin, now has an interesting example of the difference between Bitcoin and Luna, right? They understand the difference, at least figuratively understand the difference. The regulators are now going to have a catalyst to move faster, right? Because now, Gensler said, someone's going to get hurt if we don't fix this. And the congressional view 3 months ago was, no, don't do anything. Don't move too fast because you might mess up the market. And Gensler said, well, a lot of these exchanges are trading security tokens and we don't know what they're backed by. And when they crash, someone's going to lose a lot of money. Now I think the political sentiment will shift to, okay, we understand why you think we should regulate this, right? We understand why the administration thinks this needs to be brought into the public policy framework. I think this will bring the Democrats and the Republicans together. And I think this will bring the Congress together with the administration. I already think we know where their sentiments are. They want safe, transparent, well-backed stablecoins. They think Bitcoin is digital property. They think that some of the other security tokens ought to be treated as securities with some disclosure. That's what they think. They thought that a year ago. And I think there's a little bit of paralysis 6 months ago when the president's working group put out the note on stablecoins. It's like, I think that the sentiment was somebody in Congress will try to do something, but it won't happen this year. It'll happen in 2023, maybe. So I think this crypto, what do they call it? Crypto crash or crypto something. I think this mini meltdown is going to give a lot of energy, a lot of momentum to the movement to publish clear guidelines for digital currencies and digital securities and digital exchanges. And I really think that Bitcoin benefits from all those. Because when people think, well, there's 17,000 different things and they're all equal, but this one gives me 20% yield, and that one's named after my favorite dog, and this one is up 3,000%, and Bitcoin is boomer coin. I think that holds back the industry, right? And I think when people say, oh, well, Bitcoin is actually the best engineered, most conservative, most responsible crypto asset, and it's property and it's not a security, and they understand the technical hazard and the moral hazard and the legal hazard of dealing with something other than Bitcoin. When they properly risk assess everything, and then they properly understand what can go wrong, and when the rules are clear, then the benefit of using Bitcoin is going to become much clearer as well. And as that becomes clearer, and also as it becomes safer, right? Institutional money will flow in because they'll feel safer because they've got clear rules. And then all the risk capital that they underestimate the risk of holding the other cryptos. Everybody underestimated, say, the Luna risk, and they underappreciated the Bitcoin benefit. And you could describe it theoretically, but until you see something blow up, then you really can't get it through to people. So I think that this is it's a catalytic event that's going to accelerate adoption and the maturity of the entire asset class. It's going to do it by accelerating the regulation and by accelerating the guidance. But the conclusion is HODL.